Hi, my name is Jina Carranza. I'm with Silicon Valley Credit Repair, credit expert in the Bay Area, serving all of California. I'm here to help clients who have had foreclosures, short sales, bankruptcies, late payments, collections, repossessions, and really give them an open, broad view of what credit repair should really look like, what it does look like, what it entails, and what should happen for them to be placed in the healthiest credit position possible.
For the audience wondering, it's been requested many times for us to get a credit repair specialist here on, but we never do it because I don't have good rapport with people in that industry for the most part. A lot of the people here in town, unfortunately, they got bad reputation, but we've been working with Gina now for quite a while now, a couple months, and I have got nothing but amazing feedback from her from all of our clients. She's been amazing at what she does, so definitely no one I would rather have other than Gina. So when she says correctly, guys, she does it correctly. She does. I can tell she's very genuine about what she does. She's a very good person, so I think that takes a lot. Has a big part to what you do, because if you don't really care about the people, you don't care about what you're doing, then at the end of the day, it doesn't really matter, right? But yes, so Gina, when you say correctly, let's kind of dive into that. Okay, so again, a lot of the people that are out here in town that are credit repair specialists, they unfortunately sometimes just charge, and clients will go, and unfortunately, not a lot of clients have a lot of money. They're paying. 3 months go by, 6 months go by. All they're doing is signing, letters out the dispute letters, and then nothing happens. Sometimes their credit gets a little bit more impacted. Credit repair specialists stop calling them, talking to them, and they're still paying a monthly fee because they're locked in for however long they're supposed to be locked in. What is it that you do differently?
Well, the reality is what should we be doing as credit repair experts, right?
Mm-hmm.
As far as we go, when we meet with clients, it's not about signing them up. For me, I want to make sure that they're actually a candidate.
Yeah.
Meaning, like, are they in a space, if they have collections, are they in a space to repair credit the correct way and remedy those collections?
Yeah.
I bring that up first because collections, especially out in this area, they are flowing. Like, it's insane to me, the amount of collections that I'm seeing on credit reports in this area specifically.
Are you talking here in Kern County? What area?
I am in the Bakersfield
Okay.
County. So since I've been working with you guys and other mortgage brokers and realtors out this way, I'm reviewing these credit reports and I'm seeing a lot of collections everywhere.
Mhm.
2, 3, sometimes repossessions on a credit report at a time, and it's startling. It's startling more so after I've had those conversations with the clients, and they say things to me like, "Oh no, eso no lo voy a pagar."
Yeah.
My I'm doing credit repair right now with someone, and they told me I didn't have to pay them. I'm like, well, you have to pay them.
Yeah.
And most oftentimes I give them examples like, hey, guess what? If I borrow money from you, right? If I borrow money from you and we shake on it and I say, hey, I'll pay you Friday, right? We shook on it. Maybe I signed something for you, right? To give you a little bit of comfort. And Friday comes and it goes, and I don't pay you. Does it make sense for me to send a letter out to Obama or Trump or anyone and have some wild expectation that that money that you loaned me, that you literally took away from your family to give to me, is it realistic for you to believe that that debt isn't owed anymore?
Yeah.
Like, is it okay for me to just write it off as I sent out a letter and that makes it okay?
Yeah.
It's not, you know? And the problem is that people are getting knocks on their door, you know? They're getting served with paperwork.
Yeah.
They're getting summons and they're having to go to court. They're having all these judgments, at which point the debt continues to accrue interest.
Yeah.
They are then garnished, right? They're garnished 25% of their paycheck. And that really makes a huge impact on their family, on their finances, and on their ability to provide as parents, right? And pay their bills in general. And so people are being misinformed.
Mhm.
With credit repair, you can't just go out and market credit repair. you have to be legitimate.
Yeah.
By legitimate, number one, you have to know what you're doing.
Yeah.
On the paperwork side, you have to be licensed, bonded, registered with the Attorney General's office, posted with the Secretary of State, fully insured.
You made a comment the other day when you came. You said that no one in Kern County, based off of your knowledge, was actually legitimate.
Well, I looked them up because I
Okay.
wanted to see what was out here, the good, bad. I mean,
Yeah, and we're not bashing the credit people out in Bakersfield. We're just saying realistically, we looked at you looked at the Attorney General's office website and you tried to see
Right.
who was registered and nobody came up.
right.
Okay.
And that's a scary thing because I want to say, like I told you before we started,
Yeah.
80% of your clients, they all have some sort of open, credit repair, or they've had some sort of experience with credit repair in this county, So, unless you have your ducks in a row on that
Yeah.
sense. And as I said, people have to feed their families. I get it. People are in business. They're going to start off, they're going to learn, but people in this industry really can't be learning or benefiting at the expense of a client when these clients have plans.
Mhm.
They're trying to purchase a home. They're in some cases not making very much money and they're investing into something thinking that that's going to improve their overall ability to purchase a home or just improve the quality of life. And it's really not there,
100%.
So that for me, that's a red flag in itself,
Mhm.
but and really the only person that loses is the client.
And correct me if I'm wrong. I like that you mentioned that a lot of clients they kind of fall into the credit repair specialist route because they think, okay, if I go with this person, even though I have $100,000 in collections, this person's going to write a couple letters off, and none of that debt is going to be paid. That's like the common mentality that a consumer has, and that's why they go that route. And when they go that route, they find out it doesn't work that way, then they get upset. So just to rephrase what you said, for the most part, when a client comes with you, you make them understand, hey, this is debt that is owed, right?
100%.
We're not going to ignore the debt. We're going to see how we can settle it. If I don't know if I'm saying it correctly.
Okay, so we offer debt settlement, credit repair, and reestablishment. We are a full service credit repair company.
Mhm.
So for me, when I get a credit report, if you say to me, this client needs to purchase a home, or if they say to me, actually, when I'm meeting with the client or when one of my staff members is meeting with the client, our first question is, what are you trying to accomplish by cleaning up your credit?
Yeah.
Right? That's a big one.
What's the goal?
Okay, absolutely. I need to know.
Whether it's buying a property, whether it's buying a car.
100%.
Okay.
Right? Because we have to know, okay, if they're trying to if their idea is to purchase a home,
Mhm.
then we have to know what the priorities are so that we can get them there and they can actually qualify for the home.
Yeah.
Because as nobody can have lates for the last 12 months or shouldn't have lates for the last 12 months, or they need a very specific FICO score to qualify.
Yeah.
Right. There are bare minimum requirements in order for them to purchase a vehicle or a car or excuse me, a vehicle or a home or whatever the case is. Some clients just need peace of mind,
Mhm.
Right.
But I always ask what the goal is so that I can try to get them there and I can try to tailor and kind of guide them and show them what has to happen first in order for them to get there. So when it comes to collections, I won't take a case on if somebody is unwilling to pay their collections,
So
period.
earlier you mentioned when you're talking with a client and you're looking to see if they're a good candidate to work with you in terms of credit, is it due to finances that they need to have a certain amount of money? What is it that you're looking? Is it the willingness in a person?
It's an overall picture for me.
Okay.
So, for example, if you're a client and you come to me and you have 5 collections and your finances are okay, you're motivated to purchase a home, but you refuse to pay those collections. I tell you, listen, on the debt settlement side, we need to communicate with these collection agencies. We need to do our due diligence to try to, remedy this by negotiating with them to reduce the amount of whatever it is that you owe.
Yeah.
Everything's done in writing. We communicate that with you. During that process, make sure that the expectation is that you will repay your debt. You won't have to worry about paying the whole debt, right?
Right.
I mean, in some cases, medical,
Right.
some
Depending on the
utilities.
Yeah, it depends
right.
on what it is. Yeah.
Some things require some things have different requirements.
Yeah.
But if it's like a credit card and things like that, right, we'll settle it and you'll be placed in a position where you'll save money.
Yeah.
Okay.
But if you come to me as a client and we're having this conversation and I'm laying out the expectations and you say to me, no, Gina, I don't want to pay my collections. Prime example. I was doing credit repair and my credit repair specialist that I was previously with before I was referred to you said I don't have to pay those.
Yeah.
So my question in turn is, okay, do you feel like there is some protection in place for you as a client where you're like immune? Like you don't have to pay your debt.
Yeah.
That's not your obligation. It is. Wait till the sheriff knocks on your door with
Yeah.
a summons, right? It's not going to go away.
Yeah.
So if you tell me that you're unwilling to pay your collections, then I'm unwilling to take on your case.
Yeah. Okay.
Because it doesn't make sense for me to send out letters that I know will be useless in a sense, because in the event there is a miracle and we remove the majority of those collections without them having a zero balance, then I promise you those collections will re-report on your credit report.
Mm-hmm.
And the factor that really comes into place is they will re-report while you're in the middle of escrow.
Yeah.
How beautiful is that,
Yep.
right?
Mm-hmm.
You're right in the middle of a transaction. Your wife's excited. She's like, yay, I'm getting my house. Kids already picked out their room, right? You've already negotiated, spoken with, the realtor out there and
I already spent my commission too in my head.
right? Something, and the sellers, they're packing their boxes. They already scheduled the movers. Like everybody's in motion,
Yeah.
right? But then the client decides, nah, I don't want to do that. They don't want to pay their collections. And there, as I said, some miracle, right? Which isn't common. Items are deleted. And then it pops up. Surprise. What happens? That FICO score drained, and your deal's dead. And then you have all of these people who were depending on that huge life change to happen. And there's this huge delay.
Yep.
Your client no longer qualifies. And then at that point, they're willing to do things differently. At that point, because of the sense of urgency, they're willing
now
to
they're
pay
like,
that
I'll do
collection.
whatever I have to do.
Right.
Yeah. It's
and then
funny.
the clock is ticking.
It's
right?
funny that you mentioned that too, because a lot of people that I have worked with that have already gone through credit repair specialists that contact me and they say, hey, Anthony, I've been working with this guy for 6 months and my credit went from a 400 to a 700. I think I'm ready to buy a home. Cool. We go and check. Bunch of open disputes, like 10.
Mm-hmm.
And I'm like, shit, well, just an FYI for people that are listening, if you're trying to qualify for a home and it is something that you want to do and you go with a credit repair specialist that is just going to dispute everything, you cannot purchase a property with a bunch of open disputes.
Correct.
You can't do that.
Right.
And the reason why is because the banks are going to want to see, okay, well, what's going to happen after these disputes? Are they going to get settled? Are they going to get paid off? Because those disputes are, I guess it's a temporary score is what they call it. Correct me if I'm wrong.
Yes and no. But see, the bank wants to see, they want to see some remedy there. They want to understand, okay, is this an account that was truly theirs that will stay?
Yeah.
Or is this account potentially going away because there is some sort of fraud issue? There was an identity theft issue. Like the bank is in limbo. They don't know.
Yeah.
Right. And a quick fix to that, just on the lending side, because I have a lot of clients that come over and sometimes, they're, as they go through our program and we've paid collections, we've removed a lot of that stuff, and they're really in a space where now they're healthy enough to qualify.
Yeah.
But it happens a lot where those open disputes, because we're continuing, the process of credit repair, those open disputes stay until that cycle kind of shifts and closes out on its own organically, right?
Mm-hmm.
But in order to remedy that kind of on more of the immediate side, they can do with their lenders a rapid rescore. It's a, quick turn time,
Right.
48 hours sort of thing. And that's a way to kind of get it done. There's a cost involved sometimes with lenders, whether or not they pass that cost over to the client themselves. But there's, some wiggle room there so that they can so that they don't have to wait out like that 30 to 45 day time period.
Yeah.
Right. And I've heard of that. So last time, Anthony, you made a comment the other day where you said if a client goes and disputes a charge after they've already paid that collection company, the collection company would no longer go and disagree with that
Yeah,
dispute.
and I'm
right?
gonna be honest with you, Gina. I don't know if you kind of know a little bit about my story, but when I was 18 and I started real estate, I screwed up my credit like bad.
A lot of people did.
A lot of people do, right?
Yeah.
Because I didn't have income coming in. I didn't have, and like full transparency, all the big players out there that want to claim 800 FICO scores. Not everybody starts out that way. I didn't start off that way.
We had no
Fortunately,
guidance.
I had no guidance, and my experience is what taught me. I guess I'm self-taught in that sense, because I've
Yeah.
learned through collections. I've had so many different collections. So one thing that I did tell them that ended up working for me is, I had, 6, 7 collections from the water company, things like that.
Yeah,
Obviously, I know
sure.
it depends on what kind of collections you have, but like, I'll give you an example. I had a credit card collection, I had a utility collection, and what I started doing was paying them off, completely paying it off. They would settle the debt, and then a month later, I would go in and dispute that and say, "Hey, you know what? This isn't accurate," or whatever, and they wouldn't bother reporting back to the credit agencies because it cost them money to report. So they're like, "You know what? Screw it," and they remove it from my account, and it has worked so far for me, at least. I don't know everybody else's experience, but for me, it has worked.
Okay, so
give it to me.
Okay, so that was probably years ago,
Mhm.
right? Yes, same concept even now. I mean, we settle so that we can save the clients money because
Yeah.
for me, I'm like, if we can save the money and they don't have to pay the entire
Yeah, I agree.
amount,
100%. Mhm.
we have to be able to pass those savings along to the client,
Of
right?
course, yeah.
So we call and
I did pay in full, and I know you guys do save the clients money. Like if it's $1,000 balance, you guys can probably settle for half and then get rid of it, or
Well, I mean, let's be real. Clients don't always have all this money under the colchon,
Yeah.
they're like just like, "Oh, sure, let me just hand you all this money for my past kind of traumas that have
Yeah.
happened," right? So when it comes to paying these collections, number one, sometimes it's a surprise or sometimes clients have to budget for it. So we're there trying to kind of ease that little painful
100%.
situation a little bit,
Mhm.
make it easier on them.
Yeah.
Anyway, but yeah, to answer your question, and that's my point. In order for us to really remove these collections, we have to make sure there's no vested interest. We have to make sure that it has a zero balance, right? That's where these collection agencies, you have LVMV funding, portfolio recovery, like all these different collection agencies who are listed on the credit report. They don't care. They
No,
just want
yeah.
their money.
They want their money. That's what they got hired for.
Right.
Yeah.
They just want their money. And the moment they have it, it's an open field for us to go in there and dispute.
Yeah.
Now, when it comes to larger banks like Chase, Wells Fargo, like those are a little more difficult,
Yeah.
right? Those take longer.
What are the most difficult collections that you've experienced having, like the most difficult time removing? Like, what are the most difficult ones? Because I know from what my understanding is, a lot of people they're scared because they got one medical collection. It's not the end of the world. People that want to buy a home, they're like, oh no, I already got a collection. I'm not going to be able to buy. Or this is what a utility collection. And I know generally those are a little bit easier to remove. But in your experience, which ones are the most difficult to work with? We can talk about everything: collections, late payments, repos,
Late payments.
all day long.
100%. Oh, all day long. I mean, over collections, like
So, what is a late payment for the audience?
Sleep.
For the audience watching, what is a late payment, and how bad does it affect it? Because I got a couple of those too, man. I ain't gonna lie to you.
Okay, so
18 years old, got 2 late payments back to back. Man, it destroyed my credit. But I'm gonna let you explain it because you're the pro.
So late payments, please just if you guys can make payment arrangements, especially on vehicles. So just before I forget this little detail,
Sure.
right? When you have a vehicle, when you have this car loan and you have a tight month, call them. GM Financial, American Honda Finance, whoever it is, call them and say, "Hey, my month's a little tight. I'm going through a temporary," and that's the key word, temporary. Hardship. Will you defer 2 months of my payments to the back of the loan? When they
Gotcha.
do that, they bundle up those two, they put them in the back of the loan. And then at that point, you have some wiggle room, you have some breathing room for a little bit. They don't report those late.
Okay.
That's the cool thing. you know?
So let's say
then-
that one more time. So temporary hardship, can you add this to the back of my loan?
Right. So, and you want to say temporary because
Yeah.
if you go to someone and you say, hey, if you go to the lender or excuse me, the finance company and you say, hey, well, I lost my job and I really don't know when I'm going to have a job again.
Yeah.
They're going to say, well, we don't have like a start and end date for you. We don't know if this is going to be ongoing, if you're going to continuously ask us for help.
Yeah.
So when you say to them temporary, I need some wiggle room right now. I'm going through a hardship. I've had A, B, and C happen in my life
Yeah.
and whatever, that hardship is, you voice that to them. And most oftentimes, if you haven't been in that space where you've asked them for that in the past, I
Yeah.
mean, most lenders, like for example, GM, they'll do it 3 times for you during the life of the loan.
Okay.
And typically they'll only do it once in a 12-month period.
So you can't go and ask for it, January and then ask for it again in May and then
No.
ask for it again.
And don't mark my words because, they change their policies all the time,
100%,
right?
yeah.
But in general, just as a general rule of thumb, that could be an option for someone who's having a hard time, right? To avoid those late payments and then maybe take some of that money that, was going to go to the car payment and make some minimum payments on everything else so that they can kind of be okay, let things settle for that month and have a little bit of time to figure it out for the following months to try to avoid those late payments.
See, and I feel like a lot of people go through this thing where they're like struggling and they're like, no, there's no other option for me. I'm not going to figure it out. I'm just going to let the 30 days pass by. And then they get hit with a late payment that affects them for how long? 7 years, I think.
7 years.
So 7 years. So let's talk a little bit about the effect that a late payment has on your credit. Again, I'm speaking from experience. 18-year-old, 19 when I got my first car out of the dealership, I wasn't able to afford a payment, and 30 days. So it's like if your payment is due on the first of, let's just say every month, and then we wait till the next month to make a payment on the first, it's already automatically 30 days late.
Yeah.
That's when you get hit with a payment,
Right.
a late payment. So my credit went from, I think I was close to a 700 to from a 700 that I was barely building back up because I had got a collection, 18, started building it back up. From a 700 dropped down to a 580.
Yeah.
It was like 6 something that I had, higher 600, but I dropped down to almost 100 points.
Oh yeah.
I remember that day, dude. I like almost cried. I'm like, what the fuck happened to my credit?
Yeah.
And people kind of go through that thing where they're like, no, well, they're stressing. They're not looking for options. So that could be an alternative. That is a possibility. You can call and try to figure something out with that.
Oh, 100%.
Right.
With the lender.
Okay. So that's good to know because unfortunately, a lot of people have this thing where they're just like, well, screw it. It is what it is. And that mentality will haunt you for the rest of your life.
Well, not just that, but as soon as someone,
Not the rest of your life, but the next 7 years.
unless they call me.
Unless they call Gina. Right.
No, but you know what? I think that once someone makes that first late payment, it's screw it after that.
Yeah. Yes.
It's screw it.
That's exactly what happened with me. I'm like, fuck, well, I'm already at a 580. Who cares if I get another late payment? That's exactly what happened. And just kind of goes worse.
And you know what? And a lot of times it's not because they don't want to or they're irresponsible people.
Yeah.
A lot of times it's because they're going through something traumatic in their life.
Yeah.
Right.
And it's not the most important thing in their mind at the time.
Not even that it's not important, right? It's just that sometimes, just to back up, people that come to me, there's a story behind it.
100%. Yeah. Always.
It's something traumatic. It's divorce. It's, God forbid, they lost a child. It's all of these things that are just heavy. And from
fortunate circumstances that happen in life.
100%. And things just spiral out of control from there. Right. And then once they kind of come to and they're in their healing era.
Yeah.
From at that point, it's like, oh my gosh, look what I'm left with. Like, what have I done?
Yeah.
And then we have clients who are at our table and they're like, hey, this is what happened. This was real life for me. And, this occurred and I just don't know how to get out of it now.
Yeah.
So we have to break it down. Okay, well, let's look at it. Let's figure it out. And again, we refer back to, what are your goals? What are you trying to accomplish? Well, I really need to get a house because of A, B, and C. Okay, cool. Well, let's figure that out. So what does the budget look like?
Yeah.
Like when a client comes to me, I know if they're serious. If they don't fill out our paperwork, because we send out intake paperwork.
Yeah. And if they don't fill it out, then you know they're not.
Well, if they don't fill it out, I mean, I can't look at the full picture and let them know, right? What we should do, how they can maybe call Verizon and call their retention department to try to get their cell phone bill lowered by $10 because they have an ongoing promotion, right? I don't know how to advise them because I don't know what corners that they can cut when it comes to their bills. A lot of times it's just frivolous spending.
Yeah.
So I always tell my clients, like, listen, it's not how much money you make. It's how much money you save. It's what you do with it.
Yeah. It's how much you keep. 100%.
100%. Oh, yeah. I mean, I like when I have clients who are like, oh, well, I make, sometimes the conversations are, I make all this money. Well, great. That's a blessing.
Well, how much you got?
Right? Well, no.
Sorry, I had to put it in.
It's all good.
I'll tell you why right now. I got a little story with how we were able to, well, actually me.
Hold on.
Give it to me.
No. So I think all as human beings, we have to look at our bank statement.
Yeah.
I look at my bank statement because, I have children.
Of course.
Right?
Yeah, of course.
I look at my bank statement and sometimes I'm like, oh, okay, DoorDash, this,
the little
the
bills
that.
adding up. And...
Well, I have a teenage daughter, and she's like, Chipotle. And I'm like, no, no spend week. Like, this is our no spend week.
Yeah.
She's like, what do you mean no Starbies sort of thing? I'm like, no Starbies. Like, we're not going
100%.
to Starbies, but we all have to be conscious of that. So I tell my clients, listen, print out your bank statements for the last 3 months, sit down with your partner and grab a highlighter. And you guys highlight all the unnecessary spending.
How many times have we done that?
Yeah,
we do that all the time.
You have to.
We caught ourselves 1 month. I'm not proud of it. I'm just gonna say it. We caught ourselves 1 month where we were just going a little crazy, and we go through our bank statements for the past 2 months. You wouldn't believe how much we were spending in restaurants.
I can imagine, right?
Like $5,000-$6,000.
It felt like that Wolf of Wall Street little
like $1,000 at Puesto.
Yeah, it was just a little crazy. We were going we were paying attention to the
we
amount.
were just swiping, which, at that point it can come back and it may not seem like a lot, but those little charges end up adding up to, $5,000-$6,000, and that definitely adds up. So I 100% agree with you. With some people, they're just spending without keeping track of what's going out and how much is coming in.
Just kind of realigns.
So you make $200,000 a year, but based off of your spending, you're spending $240,000. You're on a negative decline. I'll give you an example. I had this guy that we were selling his property. He had to go through a short sale, and this is when people kind of like they have great credit and they over leverage their credit. They don't understand how to use it. And I feel like that's why you have to be financially smart as well. Because even if you have an 800 credit score, you give that 800 credit score to the wrong person, they're going to misuse that. And then they're going to end up being down at the 500s where, the mentality is, unfortunately, right? But we had this guy, he had a beautiful property. I'm talking, it was a brand new construction home, 2-story property. He had like 3 kids. Every one of his kids had a brand new car. He had a brand new truck. You would go into his property and you would see state-of-the-art stuff, brand new fridges, brand new couches. And I had a really good conversation with the wife, and I'm like, man, you guys are living really good. Like, what is it that's going on? Why are you guys losing the house? They're like, dude, all of this is on credit. All of this is on credit. I don't know. We don't own anything. We're losing everything right now. And I'm just like, holy, it's crazy because to the average person, you're going to see, damn, they're doing really good. But does that make sense? Little do you know,
That 100% makes sense. Like when I see this beautiful car on the road, or, I've had friends and, family or just whomever, right? You see, oh, wow, they're driving A, B, and C. I personally am not impressed by that.
Yeah.
Because
which we shouldn't.
Well,
we should.
I think people have the tendency to glamorize, right?
Materialistic items
that carry all these materialistic items. For me, I look at it and I'm like, okay, wonder how much that bill is per month.
100%.
And I see it on the credit report. I had this guy come to me. He was referred by someone, and he's sitting back in his chair, in my chair, and he's I'll never forget it. He's wearing this pink polo and just kind of very skeptical about, the credit repair process and stuff. And so I'm sitting there and I'm answering his questions. I go through, the process with him, and I let him know what's needed in his case. And he starts telling me about all this money he has in the bank and all of these things that he has, and just really just doing a lot of this. And I'm listening, and I ended up not taking him on as a client. I didn't take him on because for me, I thought, okay, you're bragging to me about A, B, and C. He's talking about his Porsche that's parked in the,
Hey, I have a Porsche. I'm kidding. Hey, but you want me to tell you something though? With me, because I've learned that the hard way, everything that we've had up until this point, I know, like, we make very, very educated decisions on what we should buy and what we shouldn't. Like, hey, can we pay this cash if something were to happen? Can we pay this off? How much money do we have in reserves? Like, we know we're not supposed to overspend. Like, that car that I have almost paid off.
Yep.
The truck that we have, we bought it specifically to make money with that truck.
I saw that.
So there's just different things like perspectives,
But see,
those are called calculated risk.
But see, you start kind of growing up to that point.
Yeah, you have to grow up to it, 100%.
Grow up to that point.
Some people want to jump and skip that growing up part and just say, no, I can pay this every month and I'm going to buy a freaking Porsche because I can pay it.
But at the same time, your nose isn't like this, and you're not sitting there in a chair with late payments across the board on this Porsche that's outside and, bragging about A, B, and C to someone that you need help from, and it's just, there's a lot of that goes on. So I look at these payments and I look at these situations and I'm like, okay, let's pump the brakes a little bit. And how can we delegate? Like, how can we delegate some of this debt and kind of push it away from your situation? How can we put it back into the world and kind of figure out how you can get away from some of this debt, you can break free, and then you can build up again, figure out the saving situation. Because let's be real, a lot of entrepreneurs specifically, like, it is just a yo-yo.
Oh yeah, 100%.
Like, and that's a lot of my clients.
100%.
And I understand it because, I mean, I don't know about you, but I didn't have the silver spoon in my mouth. You know what I mean?
Nope.
Like, I started with nothing, right? So you build up to this broad appreciation of, okay, here I am. I have this. I need to take care of what I have, and I need to move on from there. And I need to, keep all my ducks in a row, right? And make sure that you're constantly, moving around up here so that you're okay later on.
Yep.
And regardless of how much money you're making.
Yeah. You're building a foundation, basically.
100%.
And that's what I've always been big on because of the experiences. Yeah, you're right. We didn't grow up with a silver spoon in our mouth. We actually were on a negative decline when we started. When I started real estate, I already had kids. I already had a family. I had a bunch of bills. So my thought process wasn't, hey, I'm going to go and buy these things to look rich. It's like, no, how can I afford to feed my family? How can I afford? So I didn't care about the luxury items. That's why, unfortunately, I kind of let my credit go to shit in the beginning because I was more focused on this. Then I started building a foundation. And as a matter of fact, before we even made a decision to buy a car, we're like, hey, I'm going to go and make sure that I buy 1-2 properties, make sure that I have this, make sure I have my money invested, and then I can reward myself with what I want. So that's kind of the way that we've always had ourselves established. Hey, we buy A, B, and C properties. We make this much money on cash flow. Then we can go and reward ourselves with a Corvette, a McLaren, whatever we want,
So just like you mentioned, when you're talking with that, you're referring to that client, the one that had the Porsche, and he's talking the talk, right? You're just like, okay, I see the kind of guy you are. We have the very, very similar thing in our industry with people that come to us and tell us, look, dude, I got a major in business and I understand the way that the economy works. I'm a major in economics as well.
Right. You want to give me the story about the guy you just called yesterday?
Yeah. So basically this guy, I'm talking to him and I'm explaining
the guy's going to be listening.
No, yeah, 100%. And mind you, and I hope he did. And I hope he is listening because look, we follow up with all of our clients, just like you guys do. We have our systems, we follow up with clients, but sometimes when we follow up with clients, they get the wrong intention, like, oh, this motherfucker's calling me to sell me something. Like, no, dude, like if we're calling, it's to check in on you,
Actually,
to see how you are. Shoot it.
I just have to say
it.
No, I have had some really, really good conversations with your client.
Yeah.
Specifically, one stands out to me.
With one of our clients.
Yes, one of your clients.
What's their name?
No,
I'm playing.
No, she was like, you know what? He's a real dude. She's like, I actually felt like family.
Yeah.
She said that you made her feel like family. And she also said that because of her credit, nobody paid attention to her.
Correct. See,
You know?
and I love that you brought that up because see, a lot of people don't understand that. Like, if we're calling to follow up, it's to genuinely help you, guide you, connect you to the right people, the Ginas of the world, so that we can get you to what you want to get to, right? But here's the thing, though. A lot of people, they think, oh, they're calling to sell me something. The majority of them, right? 50-50, I guess you can call it. The other 50%, they'll have a conversation very similar to this one. What is it that the guy told you?
In other words, long story short, the guy is like, I know my shit, and you're not going to call me to try to sell me something. I'm like, no, I'm not trying to sell you anything. But you reached out to me because you wanted to buy a house. Am I right? He said, yes. But I'm not interested in buying a house because of the interest rates. I was like, okay, fair enough. So yeah, the interest rates is your thing. That's why you're stopping the process. He's like, yeah, that's exactly why. I was like, okay. So what if I was to tell you that the interest rates do matter to an extent, because the only thing that you really got to focus on is that monthly payment. If that monthly payment makes sense to you, you do know that you can refinance in the future, right? He's like, I know that. And I was like, okay, so if the monthly payment makes sense and you're looking to buy a house, why not do it? Are the rates really stopping you right now?
Yeah, it's date the rate. What is it? Date the rate.
People hate that quote.
How real is that?
It's real. It's real. People can hate it. They can talk shit all they want, but it's true. The reason why people say marry the house, you date the rate is because, look, you buy a home, 7%, 8% interest, whatever. You're comfortable with the monthly payment, but guess what? You already bought the home. You don't have to fight for the home. So let's say you lock that loan in, right? 7, 8%. And God willing, something happens to where rates drop down to 3%. You buy that home for 400 grand, right? Rates drop down to 3%. What do you think happens naturally with competition? What do you think is going to happen? Everybody's waiting for what? Just like that CPA major said, the business guy, right? He said, I'm waiting for rates to drop. Well, sir, you and your mama's waiting for that. Everybody and their mamas is waiting for the rates to drop. So when that happens, that $400,000 house is no longer going to be worth $400,000. It's going to be worth more. It's supply and demand, whether people want to admit it or not. So what happens in that situation? Now you have to fight for the house so that you can get a rate that you would have had if you already had
the economics major guy.
Pobrecito.
Oh, no. It's the truth, though. It's just, we do these podcasts because we want to provide value. We want people to understand how the things in reality work, because a lot of people, unfortunately, they're, you know, and I said this before, they get their resources or they get their sources from social media, TikToks, and unprofessional people that are not licensed, that probably bought one house, or their tias or tios that owned a house back in the 90s that say it's so expensive. They get sources from the wrong places. We just want to provide you guys with the correct information. That's what we do. And that's why we bring badass people like Jina along, because obviously, you've been doing very well for our clients. Our clients love you. We get really good feedback. And obviously there's something there that is working. So yes, to retract and go back to what you said, you are 100% right. If you are not qualified and you don't have the credit that you need, and you're not even nowhere near to qualifying, see how many agents actually follow up with you. Legitimately, right?
You know what? I'll tell you.
But once you're qualified, man, everybody's going to be calling you.
Oh, for sure.
Let me show you this house. Let me show you.
I mean, I'm in the Bay Area.
Yeah.
And these homes, they're through the roof.
Yeah.
I mean, you really can't buy a box for $1 million.
Right. Yeah.
And I've had conversations with some other clients that you have.
Yeah.
And I've said to them, well, again, referencing back to the rate, right? Because people are kind of like, oh my gosh, rates are so high and this and that. By the time I fix my credit, rates will go down. And I just share with them like, hey, you have to keep in mind, you've shared with me that these homes that you're looking at are new construction. Well, think about the phases that are being released.
Yeah.
You have a phase that's being released at 369 or whatever. And then, a few months later, they're releasing the next phase, and do you really believe that price point will be available? It won't.
No, 100%.
You know, they're increasing those prices.
Every phase they release,
know?
they go
They
up
increase.
$20,000 and $30,000. At
Right.
least here in town. I don't know how it works
Easily.
in other counties, but
No, easily. You know, so I share with them that. I'm like, hey guys, like you have to be prepared for that.
Mhm.
So rather than you start increasing your own equity in your own home,
Yep.
right? You're there gambling. You know, it's a scary thing.
Yeah.
It's a scary thing specifically for clients who are you know, like median type income earners, right? Your single family, hardworking Latino
Yeah.
familia, right? Who really needs help and has an opportunity to right now to purchase a home.
Yep.
And then they don't because they're misinformed.
Yeah,
Right.
correct. And it's sad because I'm like, I've talked to clients too, and they'll get qualified and they're like, you know, I always say it's not the best time to buy for everyone. It's not. Every realtor is going to tell you,
Believe
oh,
that.
and it's not, because it depends on your finances, it depends on your credit, depends on what you got going on in your life.
Right.
Not in general. You can't go based off of, is it a good time to buy in general because of whatever the world is saying. No. How's your world, right? Is
Yep.
your credit good? Are your finances good? And there's people that are genuinely qualified. Like I see they got 40, 50, 60,000 in their account. They got a 700 score. They qualify for a good amount. They're already paying high rent, but they're like, nah, I don't want to buy. And I'm like, dude, do you know how many people would kill to be in your spot right now?
Yeah.
Take advantage, dude.
And you're paying rent to someone.
Right.
You're paying rent. You're going to
know,
pay mortgage.
You're paying mortgage.
Whether you like it
yours
or not.
theirs.
This is a fact. You're gonna pay a mortgage no matter what.
You
It
know,
doesn't matter to who.
just to reiterate, that is like one of the realest things I've heard is that right there. Him saying, "How's your world?" Because, like you mentioned, there is so much information out there. If you go and you look to see if you're looking for a bad market, you're gonna find bad market
You
stuff.
can find whatever you want.
If you're looking for a great market, you're gonna find it. You know, like you said, you could find anything. But how's your world? How are your finances? How's
Right.
your situation?
Exactly.
Like
Can you afford it?
if I see a client that has a 600 score, they're like barely making it. They got about 5,000 saved up. You know, they're not the very best right now in terms of, oh, you know, and I see they're paying $800 a month, and I see they already got a very, very low rental. You know, they don't have to pay a lot a month.
Then they need to pump the brakes.
Yeah, I'm gonna say, hey,
Yeah.
save some more money. It's not a good time to buy for you right now. Get that 5,000 up to 15, maybe 20, and whenever you are a little bit higher in your credit score, then let's talk about buying a home.
Yeah.
But for right now, I think you're okay where you're at. I would hate to put you in a position to where you're not even going to afford to make that monthly payment. You're going to go into foreclosure.
And
Yeah.
believe it or not,
You know?
clients appreciate that much more than
Oh, yeah.
the agent that's trying to push them to do something they
100%.
I've
can't
told
even
a
do.
lot of clients,
100%.
a lot of clients that genuinely want to buy a house. They're like, dude, like, I want to buy a house. I want to buy a house. And I go and I find out what their finances look like, what their credit looks like. And I'm like, I would recommend you not buy a house until so and so and so. And they don't like it at first, but then they're like, you know what? We really appreciate you.
Yep.
And there's clients on the other hand that I have in escrow. Shout out to my boy Cameron. He's probably going to be watching this, but he's like very well off, dude, makes good money. We got him into a new construction home, and halfway through, he's like, oh, nah, bro, I don't think I'm going to be able to do it. I don't think so. He started having all these doubts, and I'm like, no, dude, you got to buy a home. He's about to close. Actually, we just got his text message today. I think he's going to close today. I don't know yet. But we got a message from him the other day saying, dude, I really appreciate you for pushing me. Because
Like,
those
I
are
needed it.
I needed that push. Sometimes people do need that.
And that
push.
tax write-off.
And that
Yep.
tax write-off.
That
That
tax
right.
Yeah.
Right.
Yeah. No, I go ahead.
No, yeah. So, Gina, like, let's just say, you know, we're obviously talking about the people who've had experiences with credit, that have gone through that process of having it established. They've been at highs, then they've been to their lows. Let's say I'm a first-time buyer and I have some money saved up, but I don't have any credit. Where do I get started? What do I need to do?
Okay, no credit at all?
No credit
credit
at
at
all.
all.
Okay, so
Let's talk about some credit hacks.
there's an app called Kickoff, and it's KIKOFF. So just download it. You can pay $20 a month. They will report to each credit bureau. So that
Okay.
will help. You can go to my website, svcreditrepair.com. Under the resources tab, you will see a link for the credit builder card.
Yeah.
It's a secured credit card, $200. You pay $200, they give you a $200 limit. On the downside, you know, there's an annual fee. Sometimes there's that, you know, monthly pesky fee sort of thing. So just for the sake of being transparent, right? And clients that don't have credit, they're going to run into that. Remember, we have to crawl before we can walk, right?
100%.
So, the expectation needs to be these banks are going to take a chance on you. They don't know. They don't know what they don't know.
Right.
And they're not willing to put their money, in play if they really don't know.
Yeah.
Another one.
So you got to gamble your money to get started.
I mean, you got to put some skin in the game. You
Yeah.
really can't just
Okay.
expect someone to.
So what you're talking about is a secured credit card?
Secured credit card
Okay.
is an option, 100%. And you want to have at least 3, right?
Mm-hmm.
Because if your goal is to buy a house and you're trying to build that credibility and say, hey, I'll make my mortgage payment on time,
Mm-hmm.
then you have to start building that history, building that rapport so that you can build up not only the FICO score, right?
Yeah.
And have minimum FICO score to actually qualify, right? But you have to build out that picture for the bank.
100%.
Because how as a lender, right? How is a banking institution going to come and say, okay, sure, I feel completely comfortable. Like there's
Giving
warm
you money, yeah.
I'm like warm and fuzzy about giving you money when I don't know what your payment habits are like, right?
Correct.
So
Mhm.
we have to build that picture for the bank, specifically when you have no credit or just really in general,
Yeah.
right? So if they see, okay, this person, they make their payments on time, right? They don't have any collections. There's no open liabilities.
Mhm.
Like, that collection isn't going to come and put some sort of lien and cloud on my title, right?
Yeah.
On my collateral sort
Yep.
of
Right.
thing, right? You're fresh. You're building, you're making those payments on time. Those are the appropriate baby steps to make.
100%.
So, I don't know if you guys have like a Don Roberto's jewelers.
We do.
out here.
Yep.
Okay, right?
They're amazing.
Yeah. So, the prices can be a little bit,
Higher.
Yeah.
higher, right? But they're also giving our clients an opportunity to go in
And build credit.
and build credit.
Yep.
And
Yep.
that's the beautiful thing. And you don't have to go in and buy something for $1,000. Go in and make a purchase for $300, right?
Yeah.
Mhm.
Buy something within your means.
Right.
Because at the end of the day, you have to pay it. You have to
Yeah,
make the
100%.
payment,
It's something
you
that
know?
you got to be able to pay back. So
Right.
one thing that I just want to touch up on, this is another common misconception that we have, that you need to have a very long credit history in order for you to buy your home. Ladies and gentlemen, I can tell you this right now. We have helped clients buy a home with literally just a Don Roberto's ring that they've been paying on time for 6 months. They have no credit history. They walk into Don Roberto's, they'll go get a ring out, they'll go get some type of jewelry, pay it off for 3 to 6 months, and 3 to 6 months later, they already got a 700 FICO score. Banks get them approved, they're ready to go.
Yep.
Yeah.
So you don't, and I say this because a lot of people are like, no, the banks are going to want to see that, I make some big purchases before they give me a
which
big
is
loan.
another big misconception. A lot of people come to us and
Yep.
say, "Hey,
I just
think
bought a
I'm
car.
ready. I just bought a car and I qualify to buy a car. I think I'm ready to go buy a house."
Ew, I'm about to give you the bad news,
Yeah, I tell my clients.
Congratulations.
No. And you know what? Because I have that real estate background, right?
You understand the way it works.
Oh,
Yeah.
I do the do's and don'ts.
Yeah.
So what's
conversation.
wrong about buying a car?
Why
before
shouldn't we
going
buy a
house?
car to go and buy a house?
Okay, so if you're qualified for this much house, right?
Mhm.
Say 500,000.
Right, 500,000, and then you go purchase this much car. Guess what's coming off the top,
Mhm.
right? Guess what you can no longer
Afford.
completely afford, right? Because of that car payment, because you have that commitment.
Yep. And
So
just
it's shaped
yep.
off the top.
Just so you guys know, the way it works is the banks want to see how much money you're making every month. So if you're making $10,000 a month, but you got $7,000 in car payments, that's already going to take $7,000 off of buying power. Not to mention, there's this formula. Not a lot of people understand this formula, but they actually use 45 to 50% of your actual income. So even though I'm making 10 grand a month, they're actually only going to use $4,500 to $5,000 a month as my actual affordable income for me to purchase a home. So if I got $3,000 in car payments, well, I no longer can afford a $5,000 payment. I can afford a $1,500 payment or $2,000 payment. Does that make sense?
Yep.
So that's the way it works. That's how banks go based off of your debt to income ratio. It's very important. Debt to income ratio. That's what they go based off of. So yes, 100%. If you buy a car,
Rightfully so, right?
100%, yeah.
Because you have to, the banks consider, right?
Yeah.
That's what they do.
Yep.
They consider that the kids need lunch money, right? They consider all of these things. So of course their numbers are going to drop when
Yep.
they're trying to qualify someone. There's all of these different factors that factor in, right? That are unseen.
Yep.
So the bank knows that all of that income isn't necessarily disposable income,
100%. So real quick, going back to that secured credit card. So that's another alternative. Say somebody doesn't want to go and get jewelry. They're like, hey, well, what can I do to go get a credit card? So just to backtrack. So you go to a bank and you say, hey, Mr. Bank, Mr. Wells Fargo, Chase, whatever, I'm going to give you $300 of my own money. And you give me a temporary credit card or temporary credit with my $300 that I give you. And for the next 3 to 6 months, I'm going to make purchases and I'm going to go paying off the $300 or whatever balance. And then at the end, I get my money back and you give me credit. Or how does it work? How does a secure credit card work?
Yes and no. Okay. So when you walk into the bank, sometimes they don't play nice, right? They're not necessarily going to say, okay, sure, you give me the $300, no problem, right? Because they also have guidelines.
For sure.
So there's different banks like First Premier, right? There's banks like Credit One, where, as I said, they have fees. The Credit Builder card, they have fees, but they'll approve you.
Yeah.
So those are the ones that you kind of just need to get your foot in the door for, right? Get that crawling going, as we referenced to, right?
Yeah.
And then as you build and you make those payments on time, you do the kickoff app, which will approve anybody. They don't even check your score. All you have to have is an active bank account where you're automating your payments each month. So, that's an option. But outside of that, once you start making those payments for the first 3 months or so, then after that, then you apply for something more traditional, like a Capital One credit card,
Gotcha.
right? Because you've built a little bit, you've laid out a little bit of foundation, you're okay, you've made some payments, your credit score is existent now, right?
Yeah.
And at that point, you apply for a Capital One. Maybe they start you off at 300. Maybe they start you off at 500, but it's then a traditional card. You're getting out of that secured kind of category, right? And then what's helpful while you're doing all of that is if you have friends or parents who will add you on as an authorized user to their credit cards, just mind you though, when you were added as an authorized user, remember, in the event that person that is adding you on as an authorized user, if they have derogatory information connected to that specific card, then you will inherit it.
So authorized user, real quick, for the audience listening, what is an authorized user? So I have my dad. Mm-hmm. And he has 3 credit cards. I have no credit. You can do it at any age, right? Correct me if I'm wrong, like 15 or something like that. I can go
depending on the credit card.
Gotcha. Okay. So I can go and get added as an authorized user. He can say, hey, he's on this card with me. So whatever history he has, I will get it myself, whether good or bad. That's what you're saying.
Right. So if your intention is to ask someone to add you on as an authorized user, I mean, you're asking for a favor, so
100%.
Tread lightly, right?
Right.
But also ask if they've had any late payment connected to that card.
Yeah.
Right. And what their balances are.
Yeah.
Because you have to also pay attention to balances. You never want to have a balance on a credit card of over 30%.
I'm glad you
always tell my clients, listen,
utilization rate. Right?
Utilization is it is a blessing or a curse for sure. Right. So and we'll get into that for sure. But as far as the authorized user goes, just ask, hey, are your balances low? And in the event that they are low or at a 0 balance, that's ideal. You will inherit that good, healthy credit.
And that's more instant than a secured credit card or jewelry. You normally would get that the next month, right? As soon as it reports, it's more of a credit hack for people that are looking for more instant credit. And yes, you could go and qualify for a home right away. I've had people.
Okay.
Yeah. So I had this guy, same story. Didn't have any credit. Jumped on his girlfriend's, right? So his girlfriend's. His girlfriend had good credit. He jumped on, and a month later got reported, and we were able to qualify him. So they go based off the score, right? So that in a sense could be a credit hack, right?
Oh, totally.
100%.
Yeah, absolutely.
So let's talk about utilization rates real quick. And I'm glad that you brought that topic up because not a lot of people understand this. I didn't understand this. Again, a good learning experience for me. First credit card that I ever had in my life was a Kohl's credit card. Okay. I went and I qualified for $300.
I was there that day.
He was there that day. Check this out. It was Christmas. We were broke as shit. Okay.
Okay.
It was Christmas. We were broke as hell.
Trying to
and
navigate through.
yeah, we're trying to navigate through, but I'm like, shit, I'm gonna give it a shot. I think I've been working on my credit. I was like 18 and a half, 19 at that time.
Yeah.
I'm gonna give it a shot. So I go and I got qualified for $300. We're at the store. And I look at my brother, my mom looks at me, and we're like, oh, let's go shopping. Cool. So we started buying gifts for everybody. Maxed that shit out the same day.
Yeah.
So when I maxed it out, my credit score dropped, and I'm like, what the hell? Like, what happened? And then I learned something called utilization rates. So what are utilization rates? You're saying 30%, but to the audience that's listening, what? 30% of what? Of the entire balance?
Of the limit.
Of the limit.
So if you have a card, in your case, you had a $300 limit on that card, right? $90. $90 is that 30%.
So you shouldn't spend more than 90.
Well, no, you need to stay under 90.
Okay.
You hit that 30%, game over. FICO score drops. I mean, when you pay off that card in time or the following month or even the next day, you won't retrieve that point increase as quickly as you lost it.
Correct.
So one thing to keep in mind, people have the misconception where I have clients who come to me and they have a pile of money in the bank and they're trying to rebuild their credit after, mayhem has happened. And then, I'm looking at their balances and I'm asking them, are you able to utilize some savings to get these balances down? Because I don't know what they're using their money for,
100%.
right? So, and a lot of times, oh yes, but mi compadre, he told me, not to pay
this,
it, and to just make the minimum payment. And no, that's really not, that's not helpful.
Yeah. Okay.
It's not helpful. It's not helpful to max out your cards and make those minimum payments each month. Number one, you're throwing your money away on interest. And number two, it's your FICO score is just, staying in that decline type of state. So you really want to make sure that if you are able, and, if you pay off your credit cards each month, that's ideal.
Yeah, I was going to say that. I've always been taught that you're never supposed to carry a balance unless you absolutely have to. So if I go and I spend, like, for instance, we have American Express. If we spend $3,000 in a month, we got to pay that next month. They don't want us to carry a balance.
Express doesn't play.
They don't play. So they're like, okay, you spend $3,000, you can buy a Ferrari if you want, spend 200,000, but you got to go and spend 200,000 on a bill. We can't carry a balance. So
some American Express don't allow it.
So I've been taught, for the most part, in general, with all credit cards, is like, hey, whatever you utilize is what you have to pay off next month. Like,
and that references back to staying within your means as you're
100%.
spending.
So never spend money you don't have and say, I'll figure it out later.
I mean, there's emergencies.
This couch looks pretty. I'm going to spend $2,000 on the couch and we'll figure it out later.
There's going to be emergencies that will come up. That's real life, right? But if you can avoid, using your cards for little cositas that you really don't need, that are unnecessary.
Hobby Lobby, ladies, Target, Starbucks, Marshalls.
Everybody loves Marshalls.
And I think this is very important to cover is, I had this kid, and this is all, anything that we're talking about here is either life experiences through ourselves, personal, or other people that have come to us and we learned something. I had this kid that he did get a secured credit card, or he got something. I don't remember exactly what it was, but he got something. He was starting his credit, but he went and it was only reporting to one credit bureau. So we got 3 credit bureaus, right? We got Experian, Equifax, and TransUnion. This one in specific was only reporting to TransUnion. So he had 2 scores that weren't even there. He had one that was like almost a 700. He was doing his part. But one thing, and you can correct me if I'm wrong on this, when you go and get a secured credit card, you go get jewelry, you have to make sure that those people report to all 3 credit bureaus, right?
Right. And it's not a requirement. So for example, for kickoff, for example, that example that I mentioned that, is a good kind of starter account, right? So they have options there. You either pay $5 a month and they report to one bureau, or you pay $20 a month and they report to all 3.
Gotcha.
So same difference. If you go purchase a vehicle, sometimes they only run your credit with one bureau, right? So, it's just one of those things. Different banking institutions have different requirements. They're not all going to report across the board. Typically, if it's a mortgage or an auto, they will report across the board, but not all banking institutions report across the board, including collection agencies.
Yeah.
So a lot of times, you'll see credit reports that have this kind of yo-yo effect going on with the FICO score itself. And you think, gosh, why is my credit score, you know, A, B, and C? Like, why is it different?
Yeah,
on
one's a
each-
800, one's a 740, and this one's a 580.
like what? Right?
It's a trip, yeah.
And it's because of all the different history that's on there.
Mm.
So, you know,
I gotta ask you something. I'm sorry, I
that?
cut you off. What is your thought on Credit Karma? For the people that use Credit Karma, they're like, "Oh, my Credit Karma is showing that I got a 750 FICO score." What is your thought on Credit Karma?
Okay, my thought is that free is good, right? Let's be positive.
Let's be
here.
real here.
You know, free is good. It's some insight for clients to kind of get their feet wet, I guess, right? Get in there and kind of have some information, but it doesn't show you all of your credit bureaus.
Yeah.
It doesn't show you scores or information with all 3 credit bureaus. It only covers 2. It's on a Vantage platform. So it's a different scoring model. It's a credit monitoring scoring model. So you have FICO and you have Vantage. So on the Vantage side, they're not applying for anything. So it won't give them a true credit score, right? And then it's designed to sell them something.
Gotcha.
Right?
Look at these offers.
Right.
Credit
You know,
cards,
you apply for this and your odds of approval is A, B, and C. Right.
Right.
So that really, that's my do not depend on Credit Karma.
Yeah.
That's the moral of the story.
Yeah. And I love that you said that, because I always tell my clients that come to me, again, I agree 100% with what you said. Free is good. I do tell my clients it's a good idea to where you're at, because I've had clients that come and they have a 750 on Credit Karma, but they run their score with us and
640.
And I'm like,
Yeah.
oh, okay, you know, so they're pretty off. Or sometimes it's actually been the opposite, where on Credit Karma is showing 640 and then they have a 700. So I think it just goes case by case, but I agree 100%. I think it's just a good idea for the viewers watching this. Is there an app that you recommend that can give them more actual updated scores? I have one in mind, but I don't know what you think about it. So,
Okay. So, for me, I always recommend to my clients that they don't opt into any kind of credit monitoring with credit cards, right? A lot of clients have that habit.
yep. Oh, like a Wells Fargo credit card, and it shows
Exactly.
you. Got you. Okay.
Yeah. Reason is say they have excellent credit, they have these really high balance or these really high limits, you know, these credit cards that are fruitful and giving them points and perks and, you know, all of it.
Yeah.
Once they max it out or they buy tires that month and they're you know above that 30% threshold, what happens? You know, their FICO score dips and that banking institution has access to that dip in that FICO score, right? Say they had a hard month or they didn't communicate with their spouse and their spouse is in charge of making payments and he missed the mortgage or the car, right? And it was a total fluke.
Yeah.
You know, because that has happened, right? What happens? That banking institution, that Wells Fargo app has access to their score. And then once they see that activity happening, a lot of times they start dropping whatever those limits are.
Yeah.
You know, to either the balance that they owe or something significantly lower than they initially had. So that's a red flag in itself. So I always tell my clients like, hey, you know, pump the brakes when it comes to any credit monitoring through your credit card companies. We use Identity IQ. We use Smart Credit. Those are also Vantage-based systems, right? They're credit monitoring systems. You pay for them $19.99 a month sort of thing.
Mhm.
But realistically, you know, they're not applying for anything.
Yeah.
You know, so and the scores will be off. Same difference.
Yeah.
The scores won't show. You know, the accuracy. Like it's just not going to be there.
There is one. And I got to give a shout out to this person because he actually put me on game with this.
Okay.
And it really, really surprised me because I have been using that app for 3 years. Again, this is personal experience.
Yeah, I was about to say that too.
Yeah,
This is everything that I've gone through. Okay, so my uncle Osvaldo, shout out to you. He was trying to qualify for a home. So he was working on his credit and he's like, bro, he said, I think I'm ready to buy a house. I'm like, okay, cool. I'm like, it sounds confident. Let's do it.
Yeah.
I'm like, what do you think your score is at? He's like, he's like, based off of this app, I'm at a 670, 690, and I forgot what other score he had. But he gave me exact numbers, right? So I call the lender, get him on the line,
And this
connect
is
them.
years.
This
of
was
him
years ago.
working on.
Yeah, he was working on it for
What's
years.
the app? I'm dying.
I'm gonna give it to you right now. So the lender goes, he said, all right, man, I'm gonna run your credit. And then I told Johnny, well, based off of what he said, this is exactly what he has. Runs the credit, and the exact numbers that my uncle gave me were pulled up.
Really?
Exact numbers.
Okay.
It was a trip.
It was a trip. I got tripped. That was the first time I've ever seen that. I'm like, what the fuck? This is cool, you know? And I called him after we closed his house, whatever. And he ends up getting his keys, and I'm like, okay, dude. I'm like, let me ask you, what app did you use? It's called myfico.com. It's a little bit more expensive. It's like $45 a month, something like that.
They've been around for a long time. I really like my FICO.
So every time I run my credit and I have the exact scores, I tell my lender this is going to come up, and that's what comes up. So myfico.com.
They have
We're not
different
sponsored.
options.
We're not sponsored by myfico. I wish we were, but again, from my personal
He's
experience,
getting $10. Okay, let's
use
tell
my
the truth.
promo code Mr. Elite. No, the reality is, I want to share that app because I feel like that is a very useful tool if you really truly want to keep track. I agree with the bank one that you said, like not to do it through the banks or anything like that with your bank credit cards, but that app has truly helped me out a lot. And I'm like, okay, this is pretty cool because it gives me a very, very, very accurate idea to where I'm at. Not even an idea, very accurate numbers to where I'm at and what I need to work on. And so yeah, myfico.com. That's what it is.
And it's very accurate. You could go in there and it says home loan, what the credits are going to be whenever you run your credit.
Yeah, so I didn't know that either, and I went through some
There's an
experiences.
automobile, right? That's what
Yeah.
it says. You go and you click it,
Yeah.
and it shows
Yep.
you the credits that show up on the
It's got a
automobile.
calculator.
So credits for
and a
different things.
simulator.
For credit cards, you have credit. For auto loans, you have different credit. For mortgages, you got different credit.
Well, it breaks down the categories.
Yeah, categories. So I'm just like, dude, this is cool. You know,
Yeah.
this is super. Why are we not funding this? You know, but yeah, that's what it was. So, real quick, we're about to end this off here. We're about, I think, 45 minutes in, an hour, about an hour in. One question that I did get from Celeste is we want to talk about collections for some of our clients
Okay.
that unfortunately, like you said, they go through hardship and they have to go to the hospital. And obviously we know hospital collections are not cheap. So people that have medical collections, how easy can you remove those? Or what's the process like for something like that?
Okay. So just rule of thumb for collections, you play, you got to pay. Bottom line.
Okay.
So medical collections are tough because they accrue interest. You'll see something that starts at $1,000 and then over time you're just like, what? How is this, $4,800 now? Right? So there's not a lot of flexibility. Well, depending on the collection agency, but the expectation should be, hey, there's not a lot of flexibility when it comes to medical or utility.
Yeah.
So on the medical side, these items have to be paid. In order for us to truly be able to remove them, which we remove them all the time, all day long, regardless of the collection. And let me just put this out there. There is no promise or guarantee in credit repair, period. And I think that has to be said because people have that misconception. Oh, she said she can, or he said he can remove this, there's
item, no guarantee. Right? You can't say, hey, for sure we're going to remove this collection.
There's no guarantee in credit repair. Okay. We cannot dictate as credit experts. We can't dictate what the credit bureaus will do, the type of delivery that they'll come back with, right? We send letters out to them and we do factual disputing. So I look for all the different discrepancies on the credit report where I can attack them and say, hey, we're not talking about my client and her listed derogatory. I'm talking about, and I'm addressing these items that are listed on the credit report that are identified as A, B, and C. These are discrepancies and mistakes that you guys have made as a credit bureau, right? Yeah. As a credit reporting agency. So I attack them on that front, right? And that's really where I'm able to shine and really help these clients remove these derogatories from their credit report, produce these deletions. But going back to the collections itself, as long as they have a zero balance, that's where we can really find a lot of success, go in and delete them. But because a lot of times with medical specifically, they're high ticket items.
Yeah.
They're expensive.
Yep.
So it's just one of those things. They have to be paid.
Now, let me ask you this. So obviously medical collections, it can be very expensive. $2, $3, $4, $5, $10,000. Okay.
Right.
Let's just assume for simple numbers, there's a $5,000 medical collection that has accrued interest over time. Is there any possibility that you can lower that? Is there a possibility? Have you ever had instances
Yes.
where you lower it and say, hey, instead of $5,000, we were able to lower it to $2,500, but you got to pay this now so that we can get this deleted?
A lot of times we're able to shave off quite a bit of the interest.
Okay.
But whatever the principal amount is on the medical collection side, that's typically what the expectation should be as far as repayment.
Okay.
So just in my experience,
Okay.
I mean, we will call and talk to anyone. You know, we will call and talk to anyone.
Yeah.
But it really just depends on kind of what the response is.
Okay.
So I always tell clients is things that are like credit cards and, you know, old debt that's similar to that. The expectation is for them to pay within range of 50% of whatever it is that they owe. Right. So budget for that.
Yeah.
Okay.
But outside of that, when it's medical, that's a whole nother ballgame.
Okay. And I think you had a question on repos. Like how to remove
So,
repos.
well, one of the questions that I did have, it was I'll touch up on the repos, but bankruptcies. So
That's good.
I
So
just
I'm
go,
good at removing bankruptcy.
Yeah.
I just go and I filed for bankruptcy. Let's just say 2 years down the line. How long do I have to wait until I'm in good standing to re-qualify for things and reapply?
For
Let's
everything
just
in
say,
general, like
yeah.
for a home, we can talk about the home. To
I'd
get
say
qualified,
anything.
right?
Home, car, credit cards.
So-
I just filed for bankruptcy today.
So home, depending on the different type of loan, 2-year minimum from date of discharge.
Yep.
Right.
Okay.
And then if it's what FHA, it's 3 years, right?
I think it was
No. 2 years.
2 years.
And then conventional, it's 3 years.
Something.
Yep.
Yeah, something close to that. So bankruptcy, for example, we helped one of Marisol's clients and she had a bankruptcy. We removed it in 5 months. That's not typical. A lot of times bankruptcy clients are with us for, 12 months before we can really shave everything off. Because understand with bankruptcy, you have an entire petition that's sent off to the court that has a long laundry list of debt, all these different accounts that are showing up that are hindering these clients.
Yeah.
Right. So, and in turn, all of those items, well, for the most part, are listed on the credit report. Right. So you have Wells Fargo, Chase, and whatever else is kind of
It's all like in a package, right?
right. So
I can't afford none of this crap.
yeah, like, hey, help. Right. So clients have their bankruptcy. They go file the petition. They go through the process. The bankruptcy is discharged at some point, whether it's a Chapter 7 or a Chapter 13. And, I'm not a bankruptcy attorney, so I can't really legally talk about any of that stuff as far as giving advice or anything like that. But the rule of thumb on the credit repair side is that once the bankruptcy is discharged, we're really able to get in there and remove a lot of it.
Yeah.
But we have to work on removing each item that has bankruptcy verbiage. So on the commentary section of the credit report, you will see included in Chapter 7 bankruptcy, right? You will notice that it has just all this bankruptcy verbiage. So we have to get in there and we have to remove it from each credit bureau individually.
Yeah.
So, and that's what takes time because we're sending challenge letters off to Experian, TransUnion, Equifax. As we're doing that, one credit bureau will come back and say, okay, great, deleted, right? Maybe on 3 items and we have 20,
Yeah.
and then the other 2 credit bureaus are like, no, we're not touching that. We're not doing that. We're not deleting anything.
Got you.
So at which point we have to redispute.
Okay. And these are for the collections, correct?
These are for anything that's included in the bankruptcy. So it can be a vehicle that somebody, couldn't pay. It could be, anything that was included in the bankruptcy petition. So, and then you have the public record section of the credit report.
Yeah.
Right. So you have the public record section of the credit report that shows the docket number and, when they filed and all that good stuff. So we also have to get in there and do our due diligence and try to remove that stuff per credit bureau. So this stuff takes time, depending on the amount that was included in the bankruptcy and what's attached to each account that's on the credit report.
Yeah.
So it really is a process. Like I said, with Marisol's client, it was a 5-month turn time.
That's crazy. 5 months to
5
remove
months.
an actual bankruptcy.
I surprised myself on that one,
Yeah, that's crazy.
because really That's
How long?
not-
How long in the process were they though? Like, so were they already far along in the bankruptcy
Bankruptcy?
process?
No,
or-
she was discharged.
Okay,
She was
but it was still showing up on her credit because it still shows up on your credit, even though you're
For 10 years.
discharged.
10 years from
Okay.
date of discharge.
Gotcha.
Yeah.
Okay.
So the clock starts ticking from the date that they discharged to 10 years.
Gotcha.
Okay.
Because it's a public record.
Gotcha.
Right.
Let's talk a little bit about repos because I do have some clients that unfortunately they do go through situations, or sometimes they co-sign a car for a relative. The relative stops paying. They have no idea. 2-3
Okay.
months go by. Then shit, I got a repo on my credit.
Okay. And this is a good one because I explain this to your clients and a lot of others on a daily basis. So anytime you have a repo, know that when you go buy a car,
They're gonna see that.
When you go buy a car, let's talk about start to finish,
Yeah.
right? So you go buy a car, your commitment to that bank is, hey, I will pay this, I will make this payment on time each and every month, right?
Yeah.
Right.
So you go buy the car with this excitement and this readiness to make this monthly payment. Say you make that payment for 2 years, and this vehicle was $50,000. You make $10,000 worth of payments. Something hard happens in your life, and then you can't make that payment anymore, right? So at that point, they repo the vehicle, they send it to auction, at which point you still have a $40,000 deficiency amount, right?
Yeah.
Payments that you haven't made. Keep in mind, let's rewind. When you signed that initial agreement, you said this $50,000 I am responsible for. Right, exactly. I'm responsible to pay this. I will pay this. So regardless of what transpires throughout the process, you will make that payment. Right. So they repo the vehicle after you've already paid $10,000. They tack on whatever fees are. You have a $40,000 plus amount that's still, up in the air that's owed. Right. So that's number one. And then number two, they take it to auction. They then sell that car off to, AB person, right? Whoever. And then at that point, maybe they made $25,000 because they're selling it to a wholesaler.
Yeah.
Right. And that person is purchasing it for their car dealership or whatever so that they can run a profit, right? You're not going to get the entire amount.
So there's still a balance.
So there's a
basically.
balance, right? So that $15,000 balance or whatever that dollar amount is, you are responsible for. So you take that balance, and then from there, they start sending you these notices. Hey, your car was sold off at auction. Here's the deficiency amount. And that's what a lot of people don't understand.
They're like, what's this?
They're like, I don't even have the car anymore.
Yeah.
Right. But they have to revert back to their initial commitment.
Right.
Their initial commitment was, hey, rain or shine, I'm going to pay this car.
Yeah.
Right. So that $15,000, what we do with it when we see it on the credit report is we negotiate, we go through, the motions, we explain hardship, we do whatever we have to do to try to get that decreased through our debt settlement process so that the client will end up paying much less than whatever it is that they owe.
Gotcha.
So typically they'll pay back half. Sometimes it'll be a little bit less, maybe a lot less, just depending on the situation, the hardship, and just different factors.
Yeah.
Or sometimes the banks are just difficult, and they're like, nah,
we want it all.
Care. Well, not all of it, but they want maybe like 60, 70% of it, in rare cases,
in situations like that, clients typically just go and say, you know what, screw it. I'm going to take it to bankruptcy because I'm not going to pay for that.
They can,
right?
They can. But if you have, like in your case, you have a potential, client who wants to purchase a vehicle, right? They're not going to want to go file bankruptcy.
Yeah, of course.
Because their goal is to buy a house, right? Mm-hmm. But at the same time, a lot of people, they just don't want to pay it. They're like, I'm actually going through that with another one of your agent's clients right now. And I'm explaining to this person on a constant base, like, hey, like, it's one of those things, like, we talked about this initially. I know it's painful. This is in the thousands that you have to repay, but this is something that you were aware of. This is something that was explained to you. We have to get through this hoop, and it's a huge sacrifice.
Yeah.
Because you're taking that lump sum away from your family to pay to the creditor.
It's not a little bit of money. So to some people, it's pretty heavy. So let's fast forward a little bit. Let's just say that somebody could pay that. And they do. There's a deficiency for 15 grand. You negotiated for 10 grand. They pay that $10,000 off. What happens then?
Okay. So as we negotiate, everything's done in writing.
Yeah.
Okay. So just so that your viewers can touch on the process. So we negotiate, everything's done in writing. We have a settlement offer in hand. We contact the client, let them know, okay, we have A, B, C in place, due date. This was the original balance. This is what you owe.
Yeah.
This is what the settlement amount is. Great. Super. Can we pay this? Yes. We pay it using the client's account, debit card, whatever we have to do. It goes directly from the client to the creditor. And that's it. There's no in between. They don't bring me a pile of money,
Yeah.
like there's none of that.
It goes directly from one to
Right. It goes from A to Z and that's it. Right. From that point, of course, we're disputing.
Yeah.
And as I said, we're doing factual disputing, looking at the credit report, reviewing, and just really looking for things that we can factually go to the credit bureaus with and try to work on removing.
Gotcha.
Because I can't go to the credit bureaus and say, I mean, I can, I guess, but it's not my style.
Yeah.
I don't go to the credit bureaus and say, oh, this doesn't belong to my client. It's not his.
Yeah.
Whereas a lot of credit repair experts,
They'll do that.
they'll go and they'll say it wasn't his or this or that. And we don't play that because that's not real life. And that's not what's going to get a deletion.
Yeah.
At the end of the
So
day.
like you said, sometimes it will work, but it'll re-report back on their credit too, right? There's a possibility of that happening.
Well, I mean, if there's a balance, it'll always re-report.
And I'm telling you this by experience because I've done that too. I've disputed some crap. It's came off my credit like 3-4 months later, boom, back on.
Yeah.
I'm like, shit, it doesn't work, so you got to pay them off. So yeah, 100%.
So now if it's a client that's, let's just say that they didn't make a payment and they just forgot about it, nobody said anything, they never received the letter, is there a statute of limitation as to how long a creditor can go after a client?
So statute of limitations is 4 years.
4 years.
4 years from date of last activity. But the thing is if they're trying to buy a house, it's going to continue on their credit report from the date of last activity up to 7 years.
No, let's just say that they hadn't reported yet, but they know they screwed up.
That's very uncommon. But regardless, if the debt is actually valid,
right?
If the debt is valid, they have up to 4 years to collect on that.
Yeah.
Well, I mean, technically, they can receive a payment until the end of time, a voluntary payment.
Right.
But it's very uncommon that something isn't reported.
Gotcha.
Yeah.
Okay.
Cool. Well, guys, I think I don't know if I'm missing anything else right now. I think we've touched up on some pretty good
That's my
subjects.
last one. Yep.
I can tell you this. It was, I don't know for you, but for me, it was worth the 3-hour journey. She drove 3 hours, guys. So I really, really greatly appreciate you, Jina, for coming down.
Oh, thanks for having me.
I just 3 hours
today.
3 hours to give you guys knowledge, to give you guys, hopefully, you take a lot of value from this. And would you mind sharing your Instagram, your number, kind of how people can get in contact with you if they have any questions?
Absolutely. So, again, my name is Jina with Silicon Valley Credit Repair, your credit expert, ready to help you purchase a home and help you remedy any credit needs. We are a full service credit repair company offering debt settlement, credit repair, and reestablishment programs for 6 months. As I said, on the debt settlement side, we're not intimidated. We will get in there and negotiate anything that you have going on to really just try to place you in the healthiest position. Our Instagram handle is SV Credit Repair. And my personal handle is credit_pro1. We're located at 7660 Monterey Street, Suite 202 in Gilroy, California. We're in the Bay Area. Happy to provide any consultations over Zoom. So if in the event you'd like to meet with us, feel free to call our office. We're at 408-337-8620. Any questions? Nothing's too small. We're ready for it. Ready to just help our clients.
It doesn't hurt to ask, guys. Just go ahead and again, be proactive, not reactive. Just get your guys' self set up. I love that you say that you set them up with a game plan, because initially I always tell my clients, you're going to start a race and you're not going to know where the finish line is. You want to know where you're headed. You want to know what you have to do. So guys, make sure to contact Jina. I never put somebody on here unless I personally can vouch for them. I can personally vouch for her. And I can tell you guys right now, my clients love her. She's already gotten people qualified and they've already bought and closed deals with our company. So it works 100%. But
yeah. But just last thing I do want to touch up on for everybody who is watching this channel. At the end of the day, we can lead a horse to the water, but we can't force a horse to drink the water, right? So it's going to be up to you guys to get it done. Can we show you? Can we give you the game plan? 100%. But it is up to you guys to actually go through with it.
100%. All right, guys. Well, Gina, thank you so much for coming. I appreciate you again. 3 hours. Hopefully, it was valuable to the audience. It was definitely valuable to us. So again, we greatly appreciate you.
Thank you for having me.
And yeah, guys, stay tuned for the next one. And we are excited because we got another special guest speaker coming. So stay tuned for the announcement on that one. All right.